Good morning everyone and welcome to another RF Crypto video. As you can see, the markets are below the $1 trillion mark. They have fallen quite a bit in the last 2 days due to the Federal Reserve Chair Jerome Powell's remarks that the Fed will continue to increase interest rates in order to tame inflation. And as we know, if interest rates increase, money becomes more expensive as interest rates are the price of money or the price to borrow money. So you have to pay more interest on your loans now than before, and that leads to a decrease in risky assets prices. And crypto is a risky asset, and therefore we have seen massive drops in the crypto market. In the last 7 days, Bitcoin down 6%, Ethereum almost 7%, BNB 5%, Cardano 4%, Solana massive 11%. And like this, the crypto market continues to bleed. We are seeing another bear market forming, or the resurgence of the current bear market. We saw a little bit of a bullish trend when the prices went up to 24,000, 25,000, but it's all been retracted due to an increase in interest rates or the expectations that interest rates will be increased. So going forward, when interest rates actually increase, we won't see a massive drop anymore because it has already been priced in. We might see a small drop of 1 to 2%, but it won't be as extreme as 6 to 10%. Moving on to the price of Bitcoin, zooming out a little bit, we can see that it was at 25,206 on the 15th of August. In less than 15 days, its price went down to 19,829. And this was the point where everything started to go south. When Jerome Powell made the announcement that the Fed will keep increasing interest rates, the prices dropped and they went all the way down to the $20,000 psychological level. We know that $20,000 is the mark whereby prices don't go down from too much unless there is a lot of negative news. I had stated previously that the markets were trading laterally, there wasn't upward movements going on, and it was close to touching the $22,000 mark. However, I did mention that if we see any negative news, the prices might go down to 20,000. And the prophecy has come true in a sense, because when Jerome Powell stated that they're going to continue increasing interest rates, the prices went down to 20,000 as predicted. And I had said $20,000 because this is the price at which the drops usually stop at. It is a psychological level whereby the prices drop, but then the bulls don't let it go way below that. And we can't be sure that Jerome Powell's announcements or his statements were the cause of the decrease in prices, because if you look at here, the 26th of August around midday, there was a massive sell-off, 4 consecutive red trading activity whereby the volume was all negative, especially here where it was peak negative. This was the time when Jerome Powell made the announcement and there was a massive sell-off, which saw the price going down from 21,800 all the way down to 19,500. We don't need to worry too much about it. I know that it is painful, but it is temporary. Inflation, once it gets under control, I think we will see the prices going up again. But we have to face temporary pain for long-term gain. And going a little bit into the story, Bitcoin tanks after Powell says Fed may keep raising interest rates. So the US central bank will keep increasing interest rates because this is one of the only tools they have in their arsenal to combat inflation, which is extremely high. It's at 40-year highs. The rest of the crypto market was also in the red following Powell's announcement. Ethereum, the second biggest digital asset, trading for around 1,600, a 6% drop in the past 24 hours. Powell basically said that these are the unfortunate cost of reducing inflation, which means that we have to face some pain. And he says that failing to restore price stability would mean greater pain for US households. What he basically wants to say with this is that we need to face this temporary pain of increased interest rates and depressed markets in order to have long-term price stability. Because if we let things go the way they're going and prices keep increasing by 10% every year, then it will cause greater pain for US households due to increased prices every year. And if a price increases 10% this year and then again 10% next year, then the second year is compounded. It's 10% plus the 10% of the previous year. And we know for a fact that wage increases don't keep up with inflation. So in real terms, a lot of people's disposable income would become eroded if the Federal Reserve didn't get inflation under control. And this is what they're trying to do. We are in a very precarious position, but I think that the Fed is making the right decision in a way that there are no real tools to combat inflation besides interest rates increase. And this has led to a strong dollar, while other markets like US equities have taken a hit as investors move away from risk assets in the face of economic uncertainty. For example, Dow Jones dropped 1.6%, S&P 1.9%, and Nasdaq 100 2.5%. And obviously, when we have such uncertainty and we have such turmoil, and when we have the price of money, which is the interest rates increasing, people tend to shy away from riskier assets like crypto and high-tech stocks to safer assets like blue chip stocks such as Apple, Amazon, Google, as well as bonds, and especially cash. And talking about cash, this is a very good time for people who hold a lot of cash, because if they have cash in their bank accounts, they can put it in a fixed deposit or any other money market instrument. It can get high interest rates while doing nothing. Interest rates are increasing, and the more they increase, the more you can earn on your cash that is sitting in the bank. This is another reason why the increase in interest rates is going to help tame inflation. If people are keeping their money in the bank to earn interest, they're not spending it. And if there's less consumption, there's less pressure on prices, there's less demand. And if there's less demand, then the prices don't increase as much, or they even decrease, because supply will stay the same while demand will decrease, and this will reduce inflation. So Singapore's financial regulator has said that investors are irrationally oblivious to crypto trading risks. The Monetary Authority of Singapore, or MAS, the country's central bank and financial watchdog, is considering adding extra protection for crypto users by making it more difficult to buy crypto. It will start exploring ways to add friction to retail access via customer suitability tests, limit access to credit facilities, and credit facilities to reduce frivolous investments. And they're saying that many consumers still seem to be irrationally oblivious about the risks of cryptocurrency trading, but a positive sign is that an outright ban will not work. Singapore's MAS has a point in one way, because cryptocurrency is risky. Trading it is very risky. We have seen great volatility. We have seen prices shoot up by 10% and then decrease by 15, 20, 30% in the next day. We have seen people investing large amounts of money or even their entire savings into cryptocurrency, and then when the prices tank and we're in a bear market, they lose all of their money. And this is what makes crypto investing extremely risky. And this is why the Singapore MAS is concerned, and they want to protect their citizens. They also say that innovation and regulation are not incapable of coexisting, which means that we need to have innovation, which is the advancement of the blockchain industry and the cryptocurrency industry by extent, as well as regulation in order to complement that innovation, such that people can trade cryptocurrencies and also companies can go into innovating in a safe and secure manner, protecting their interests and making sure that everything is done according to the law in the safest and most conducive way possible for both the consumer, the customer, and the government. So the MAS will also seek the involvement of international regulatory reviews, co-create various measures to minimize harm to investors, and urge people to practice caution before investing. So let's see what happens. I don't know if they're going to overly limit the access to crypto. However, I hope that they don't limit too much and that they can implement such a regulation that is not too restrictive but not too liberal either. So let's see what happens with the Singaporean MAS and what regulations they're going to instill for crypto trading in their country. And that's it for today's video. Thank you very much for watching. If you enjoyed today's video, please leave a like, hit the subscribe button, and share this video with your family and friends. Invest wisely, and cheers.